Hello everyone, welcome to another strategy number 2. Okay, welcome. Make sure you have read the book Master the Markets mentioned in the lesson 1 before using our trading strategy. Now, volume spread analysis, I will share with you my second strategy. This strategy applies on gold, pound USD, euro USD, AUD USD, USD JPY, USD CAD, New Zealand USD. Also, you can apply this strategy in Bitcoin and oil as well. So the time frame you use for this strategy is, if you are trading in the Asian session, you have to use the time frame of 1 minute and 5 minute chart. If you are trading in UK session, then you have to use the time frame of 5 minute and 15 minute time frame. If you are using the trading session of US session, then you have to use the time frame of 15-minute chart, 30-minute chart, and 1 hourly chart. Never go above the 1 hourly chart. 4H daily, no. Okay. And if you as per my strategy, if you got some trade or entry or setup, then you should check it whether the stop loss is above 50 pip or not. If it is above 50 pips, then ignore that trade, skip that trade. And if it is below 50 pips or 50 pips, like ideally 30 to 40 pips, then take that trade. Okay, so your stop loss should be 50 or below 50. That's very important. If your stop loss is more than 50 as per the setup, then don't trade that setup. Again, the broker we use is ExiTrader. On mobile you can log in with demo is okay. You can read the demo count or tick volumes for this strategy. And if on desktop, you can use MT4 MT5 for ExiTrader demo account. Okay, we use demo account of ExiTrader to track the tick volume, and that's best. And on the trading view we use Oanda broker. Okay, on trading view we use Oanda broker. Now next, let's move on to the next strategy. This is strategy number 2. Look, market is already in a downtrend, and suddenly market goes up with an ultra high volume on 3 bullish candles. There is an ultra high volume on 3 bullish candles. You are clearly watching this. Okay. Now third candle drop down, closing below of the previous whole 3 candles, mean engulfing the previous 3 high volume candles. So whenever you see the strategy where market is actually engulfing the ultra high volume area, I mean these 2 buy candles, there are ultra high volume on these 2 buy candles. Look at this, these 2 buy candles have a ultra high volume, a volume that is greater than previous volume. This is, I think, I1H chart, 1 hourly time frame of gold. And on these 2 buy candles there is a ultra high volume. If you see two buy candles with a ultra high volume, and then next candle engulf the previous 2 candles, like next candle form very aggressively in sell side, bearish candle closing below the low of a whole previous 2 candles, that is called engulfing. You can google it out, what is the engulfing pattern. You got the point. Now on these 2 buy candles there is a ultra high volume. In professional players or big players or professional money or smart money or institutional traders are actually active there, and what they are doing, mostly they sell in buy candles. Now here I am when you see ultra high volume on both buy candles, then you should be in your mind that players are selling at this place. And when next candles reverses aggressively, close below the previous 2 candles, that means that is engulfing the previous 2 candle, and the volume is in fact higher at this candle as well. If that volume is even low, that still it is a powerful signal. Whenever you see that, you sell at this place, you place stop loss out above, and you get 1:3, 1:4 profits. That's very important. Okay, this is the setup, clear cut setup. This is 2 bar engulfing setup, and ultra high volume on all three candles associated with that, and you have to wait for sell candle to engulf the previous two candles. When it is engulfing the previous two candles, engulf mean closing below the previous two candles in a one candle, then whatever with the volume will be high or low or whatever, you just sell it. You sell there, you should put stop loss on above, and you should take profit at 1:3, 1:4. Okay, but this engulfing pattern should have some sort of body, bigger body than previous two candles. That is very important. Okay, so this is the setup. Again, there is a bullish trend. Previous there was a bearish trend, and that setup came in between that trend. Now it's a bullish trend, then market suddenly dropped down, maybe some news came in. And this is the 30-minute chart of gold. There is ultra high volume or two bearish candles, and you know that market makers the big players, the smart money, the institutional traders, what they do, they buy on sell candles. And the too many volatility when it comes to the market, then these draws actually give the emotional impact to the retail traders. They panic and they sell. When they sell, players got the opportunity. Players know the trend is still intact. Players buy against them, and in meanwhile these do buy candles got the ultra high volume. Check the volume is is bigger than the previous 10 to 20 volumes. Now you have to wait for bullish candle. Once bullish candle established, whatever with the volume on bullish candle will be high, low, ultra high, whatever will be the volume, you just buy it. Okay, you just buy it. Any engulfing pattern that is closing above the ultra high volume sell candles is a sign of buy. You have to buy this. You have to put stop loss below there, and you shall expect 1:3, 1:4. Okay, another market is going up. It is an uptrend. This is a 30-minute chart of crude oil. Market was going up, then market suddenly dropped, then maybe some news came in, market dropped, and suddenly these three candles have an ultra high volume appearing on these three candles. Okay, and that means that big players are actually active there, and that is why candle size is shrinking. Look at the size of candle. Big size, smaller size, smaller size means momentum is losing to the downside. So you have to wait for the market to respond. When market responds and start engulfing the previous whole ultra high volume, whatever will be the volume on the gulf is, you have to buy there. You just need to buy there, and you have to place stop loss below, and you have to expect 1:3, 1:4 after that. So that's the setup. Very power setup. Just you have to point out the ultra high volume candles, and you have to wait for the engulfing pattern to appear. When it appear, you just buy there, you place stop loss below, and you should expect 1:2, 1:4, 1:5, and so on. Okay, this is the strong setup of engulfing pattern. Okay, now this buy candle should can have a low volume, high volume, ultra high volume, whatever. You just buy it. I don't need any specific volume on this buy candle. Just it has to close above the previous 2-3 candles. That's it. Now here you can see that market is going up. Previously market was going up. This is a 1 hourly chart of Bitcoin USD, and market is actually breaking out the previous resistance line and getting a ultra high volume. And on these two buy candles there is a clear cut ultra high volume. Look at the volume, very very high, and look at the size of candle, very low but still bullish candle. So here actually public is aggressively buying considering the breakout, while especially at 100k level, this is a very crucial level, 100k level. So psychological impact there as well, a psychological impact there as well, while players are actually using that psychological impact and they are selling, while the retail traders are buying, provided the range of the candle to shrink. And when you see two buy candles with an ultra high volume, wait for a one candle to close below both candles. If one candle close below both candles, sell that. If volume is low, that is perfect. If volume is high, still you can sell that. If volume is ultra high, still you can sell that. There's no issue. Okay, volume I does not matter on this bearish engulfing sell candle. You just have to bearish candle just needs to close below the below the low of both candles, bullish candles. The bearish candle has to close below the low of previous two bullish candle. That's enough for us. We don't need even low volume, high volume, ultra high volume. Whatever volume comes in, you just sell it, place stop loss on above, and just get 1:3, 1:4, 1:4, 1:3, 1:4 activity. So that was the sell setup. Okay, now here it is, market came down. 30-minute chart of Bitcoin, market slightly came down. Suddenly market maybe some panic, then market got three candles within an ultra high volume, a volume which is bigger than the previous 10 to 15 volumes, is nominated as a ultra high volume. And then market start going up, engulfing the previous three candles. Volume is low, so this low volume engulf is a very powerful sign of buying. So you can buy there, you can place stop loss below, and you can expect 1:3, 1:4, 1:5. So that's a very clear setup. You have a three ultra high volumes, clear cut on a sell candles, and you know that players, big players, smart money, professional traders actually buy on that place. And when market reverses, it is producing a low volume. So low volume means market makers are active, and they are actually market makers are active. And what market makers are doing, they know that market has to go up a long way up, and so they are actually removing their sell liquidity. And when they're removing their sell liquidity, market has needed a less force to go up. That is why low volume moves you will see, and that is why market going up. And you got 1:3, 1:4, 1:5 on this trade. So that is the another scenario, perfect buying scenario. This is again market. This is a 15-minute chart of Bitcoin, market coming down. Then suddenly there is an ultra high volume of these three candles with an ultra high volume which is bigger than previous 3 to 4 to 5 or even 7 10 volumes. And then market suddenly jump engulfing the whole previous three candles, and there is a low volume in this as well. So engulfing, so you don't need to any further confirmation. You just need to buy there, you place stop loss below, and you should expect 1:3, 1:4, and you look at that market actually turned strongly to the upside. So why there was a low volume on this bullish candle engulfing the ultra high volume? Because market makers who were operating closely, watching the market, saw the activity of previous three candle where there was an ultra high volume. They saw the footprints of smart money which were buying, so they actually adjusted as per the situation, and they removed their sell liquidity. That is why this bullish candle have a low volume, because there was no resistance to the downside, no sell orders in front of it. That is why this bullish candle have formed on low volume. So that means that if market makers are actually cutting their sell liquidity, so that means that they are also bullish as well. So that is a powerful bullish setup. Even if the bullish candle have a ultra high volume, still I will consider this as a strong setup. But if it is a low volume, that is more powerful. If it is normal volume or high volume, still you can buy and you can place stop loss below. But if it is of a low volume, that is a very powerful signal. So you just need to buy there, you should place stop loss below, and you should expect 1:3, 1:4, 1:5 accuracy. Again, there is a Euro USD chart, a trend, a bullish trend in the background. Then market came down, then suddenly maybe some news came in, and there was two sell candles with an ultra high volume, especially this morning star pattern. When this morning star pattern getting the morning or evening, this is a morning star pattern. If this getting the ultra high volume is a huge importance. That's a huge importance. This whole pattern, it look like a morning star pattern. So that is also a confluence factor as well. But if you see two sell candles, regardless of their sizes, if you see two sell candles with an ultra high volume, now wait for one bullish candle to actually engulf the previous ultra high candles, ultra high volume associated candles, and when market close, then you should buy there. You look at it, almost engulf the previous two ultra high candles and form a morning star pattern. So you should buy there. You should place stop loss at below, and you should expect 1:3, 1:4, 1:5 accuracy. Also, there was a no market was start going volume was also dried after this pattern, so that is also an important for the us to see that market has actually changed the momentum from downside to upside. Now there is a Euro USD chart, 30-minute chart. There is a resistance to the left side. Market start going up. That when maybe any news, markets tried to break out, and when breakout came in on a two bullish candle, there was a associated ultra high volume, and ultra high volume breakouts on bullish candles are always a fake out, as I told you in my previous lessons. Now you have to wait for the bearish candle. Bearish candle came in, engulfing the previous two high volume, ultra high volume bullish candles. The sell candle engulfing the previous ultra high volume bullish candle, and the sell candle also have a ultra high volume, but still you will sell it. You will sell it here. You will place stop loss above, and you should expect 1:3, 1:4, 1:5 on your trade. So that is also a perfect setup. So because this high volume is at this high volume, market makers actually not only canceling their buy orders, but they are actually aggressively selling as well. So market makers either not canceling their buy orders, canceling their liquidity, but also aggressively buying as well, aggressively selling as well, by looking at the scenario of the overall structure and overall pattern, that previously on two candles there was a huge selling of smart money, because smart money sell on bullish candles. So the market maker watch the activity closely, and they react to the situation, and they sold as well. That is why there was a ultra high volume associated with that candle, and that aggressive selling actually brought it down towards 1.1130, almost 70 pips of profit you got from this trade. Now this is a resistance to the this is a resistance area. Now this is the previous resistance area, and market was going up. Then suddenly you saw the ultra high volume. Ultra high volume is always the break. When you see the breakout with the bullish candles, that is associated with an ultra high volume. Just you need to wait for one sell candle. Then one candle came in, engulfing the whole previous ultra high volume sell buy candles. Then you just sell there. You sell at this place, you place stop loss above, and just watch the magic. Price will go down towards your situation, and you will get 1:3, 1:4, 1:5 profit. So that is a 1-minute chart of Bitcoin, British GBP USD, and this is a 1-minute chart, and that is recommended in 1 minute Asian and UK session. You cannot use this strategy of 1-minute chart time frame on US session. So if you are trading on 1-minute time frame, you should not trade in US session. 1-minute time frame is only recommended in Asian and UK session. So on 3-4 candles there was an associated ultra high volume which is bigger than the previous whole day, and then suddenly a strong bearish candle closing below all the buying candle which were ultra high volume associated with ultra high volume. That means player were actually selling at this place, and suddenly markets reversed back, and then if you see ultra high volume in this sell candle, still you will sell. If you see low volume, that is very good as well. So Here you will sell, you will place stop loss above, and you can expect 1:3, 1:4, 1:5 activity. Sometime market collapse quickly, and sometime market start ranging for a while and then drop very aggressively downside. So that is the setup, engulfing setup. Now the British pound 30-minute chart, we are in a downtrend. We have resistance to the left, and the market tried to jump, and then market associated with these two candles, a huge volume came in, maybe some news came in, and these two candles were associated with ultra high volume, the volume which is bigger than the previous 10 to 15 to 20 volumes, and they would mean that smart money is active there. Now wait for one selling candle to reverse. When one selling candle reverse down, you see that it is actually engulfing the whole ultra high volume. The sell candle is actually engulfing the previous two ultra high volume candles. That is very important. Then you just need to sell that whatever volume on sell candle will be, whether average, low, high, ultra high, you just sell it. You place stop loss on above, and you should expect 1:3, 1:4, 1:5. Now here there is a USD JPY chart, one hourly chart. Market is coming down, there is a support, then market start going up, then market came down again to test this support, and there is a three sell candles with an ultra high volume, a clear volume, ultra high volume. This is a 1H chart, and in 1H chart we compare it with the previous 10 to 15 volumes. That is a ultra high volume with no question at all. And then you wait for a bullish engulfing. These two candles have a ultra high volume, and when this buy candle has also ultra high volume. So this buy candle volume is not important here. Important is that this candle is engulfing the previous two ultra high volume. That's enough. Whether this buy candle have a low volume, high volume, or ultra high volume, that's not the matter. You just need to buy there. You should place stop loss below, and you should expect 1:3, 1:4, 1:5 activity on there. Okay, these two sell candles may be 3 candle, 4 candle, 5 candle. These are the setups: 2 candle, 3 candle, 4 candle, 5 setup. These these setups came time after time in any session which you are trading. Okay, you have to just focus on the charts. Again, this is a chart of 15-minute chart of USD JPY. Market has came down, then market took support, then market jumped up, then market slowly came down within a low body, two sell candles within an ultra high volume. The market start slowly going up within also ultra high volume. Market is clearly engulfing the ultra high volume sell candles, mean smart money is actually buying here clearly. As smart money do, smart money always buy on sell candles, and when there is a direction clear cut, which is what bullish candle is closing above the ultra high volume box, and you just need to buy there. You should place stop loss below, and you should expect 1:3, 1:4, 1:5 activity, 1:5 on your trades. Okay, simple setup. There's no confusion in that. Again, this is a USD CAD chart of 1 hourly time frame. There is a gap in to the left. Market is going up, actually filled that gap, and then market suddenly got these the resistance as well, and then market break out those resistance, and also cleared the covered the gap that was needed to be filled. That was almost filled. Then market got these two ultra high volume of these buy candle, then market start engulfing. This is some sort of evening star pattern as well. So that evening star type pattern also is a candlestick, a very powerful pattern. So this sell candle is actually almost engulfing the previous two buy ultra high volume candles. You need to sell here. You should place stop loss above here, and you should expect 1:3, 1:4, 1:5 activity. Then after that market came down, then there was a two candle sell candles with an ultra high volume, and market start going up within a low volume. Then that is a perfect strong buy scenario, because bullish candle is engulfing the previous 2 to 3 buy candles with the low volume, means the market makers are also active and responding to the situation, and they are actually cutting their sell liquidity, so they will sell at higher rates and then market start going up. You should buy there, you should place stop loss below, and you should sell, expect 1:3, 1:4, 1:5 activity. So on this chart there was one sell pattern, sell scenario, and when there was a one buy scenario. Okay, and this is Australian Australian dollar chart, 30-minute chart. Market was going up, then market suddenly collapsed, gone down in a 3 candle with an ultra high volume, maybe pushed by some news. On 3 sell candles, players, smart money, big players, whales, institutional traders, whatever you call them, they were highly operative here, and then due to their operation they were buying there. Then suddenly in market demand overcame the supply because of their buying, and then a bullish candle engulfing the previous 3 sell candle which were on an ultra high volume. Then this bullish candle has also ultra high volume, which can be a low volume as well. No matter whatever volume on bullish candle will be, you just need to buy there. You should place stop loss below. You should expect 1:4, 1:5 after on this trade. Okay, now this is the chart of New Zealand USD 5-minute chart, 5-minute or 15-minute chart. Market is going down, suddenly market was correcting up. Suddenly on this chart, 5-minute chart, there was some high transaction going on. There was a 2 small bullish candles with an massive ultra high volume. Then market reversed back, a strong bearish engulfing pattern came in, strong sell candle engulfing the whole scenario of previous 2 buy candles engulfing buy candles. This sell candle is actually engulfing the 2 bullish buy candle which were associated with ultra high volume. You need to sell here, you need to place stop loss above, and you should expect a massive sell after that, and you got the trade in profit as well. Now this is the chart of silver with an 15-minute chart. Market was going down, then suddenly on 3 sell candles there is a 2 ultra high volume sell candles associated with an ultra high volume. Then you saw a bullish engulfing pattern closing above the high of box which was created by 2 selling ultra volume candles. Then you need to buy there, you need to place stop loss below. You need to you can expect 1:3, 1:4, 1:5 after that, because this is a very strong bullish signal. Okay, which means market when came down, the retail traders were selling, the big players were buying, and the supply was clearly absorbed by the big buyers, big players. Those were buying, and then this demand dominated so well that now trend actually changed, and the pressure of supply that were coming from the retail traders for their selling was actually removed, and now market turned back to the upside, clearly indicating that demand is in the control. And now you just need to buy there, you place stop loss below, and you should expect 1:3, 1:4, 1:5 on these scenarios. Thank you. That is a very simple strategy. Okay, and you just need a engulfing pattern, which is actually you just need a bullish engulfing pattern that is engulfing this ultra high volume box. Okay, you just need to buy there, place stop loss below, and you should expect a huge upside. Okay, you just all cases are same. Here market is going up, and there was a two UHV means ultra high volume buy candles, and you got the engulfing pattern have a low volume, that's good. If it has a high volume, that's okay. You just need to sell it, place stop loss above, and you should expect 1:3, 4, 5 accuracy trade. Again, there's a bullish engulfing pattern actually covering the box of 3 bearish ultra high volume candles, so that is clearly a player operating here in buy side. And when they were operating in a buy side, these retail traders were selling and the players were buying, and suddenly market sellers were absorbed. The sellers were the supply was too much absorbed by the players, and for that reason the market turned back to the upside because the demand was created by the player, and after that the market start going up because this their imbalance of supply and demand actually was the reason. Demand was overruling the supply at this place because players were actively buying there. Okay, so this is the simple strategy. Every whether this is a two candle, whether this is a three candle, whether this is a four candle or five candle, you need to an engulfing pattern which is actually closing below the ultra high volume box. Okay, that's important, and you just need to sell or buy on that thing. Okay, thank you.